Indeed, thank you very, very much for that. I do have one of the most eminent voices in macroeconomy and finance, Dr. Raghuram Rajan, joining us right here at Davos at ET now. Thank you very much, sir, for being with us. This Davos was a lot about India. You have seen many global leaders make a pitch before. What did you think of Mr. Modi's?
Well, I think he was trying to say that India is open and favors global initiatives, climate change, also keeping the trade channels, investment channels open. So I think he was trying to add another voice to the global leaders who are saying that the system we have is a good one and we should be more cooperative within it.
True to India's style, obviously there's a lot of euphoria around that at Davos, and there's a lot of euphoria back in our financial markets as well. Do you believe the fundamentals back that euphoria?
No, look, I think India is a recovering economy. Recovering because we had a couple of shocks last year. And recovering in the face of rising oil prices. So it's something that we have to work on. The fact that we are still growing at 6.5%, is creditable, but we really need to build on this. And to some extent, we're going to have to build on it in the face of adversity as oil prices move up from the levels that were quite easy a few years ago.
I will just speak to you about oil and the windfall gains from all of that, but just a quick focus on the Indian markets. You know, the Sensex hit a new high, the Nifty hit a new high. Markets have almost been on tear. What are you going to put your finger on? I mean, what is driving this rally? It can't just be fundamentals. Is it being driven by sentiment? And are you someone who's concerned that perhaps too much money is now chasing too few stocks?
Well, it's an across the globe phenomenon, right? Look at the Hong Kong market, look at, so we're not alone.
There hasn't been a correction in 10 years.
I think across the world markets have been ramping up. And so to that extent, we're part of that same phenomenon. It is a phenomenon where a lot of money is chasing relatively limited assets. And, some of the concerns have to do with the narrow areas where this money is going. But I think longer term, I think the issue is whether we can get our fundamentals, to be really strong. There are people who look to India for growth leadership over the next 10, 15 years, and I think that we need to prove them right and do what we need to do.
I'll ask you if we are on track to proving them right or not in just a minute from now, but I just want to do away with the markets. The liquidity that we are seeing, at least in the Indian markets, is being led by domestic investors. We are perhaps seeing a flush of finally retail investors coming to the market, household savings making its way, SIPs have gone up, the mutual funds and all of that. Do you believe this is financialization and formalization of the economy? I mean, the government wants us to believe that this is an after effect of demonetization.
Well, I think what happens is that over time as markets move up, people get more enthusiastic about it and are willing to put money in until they come down, at which point. So we have to look beyond short-term movements to longer-term trends. I think the Indian market has been growing more financialized over time. I don't know whether it's one act like demonetization, but it's a more general trend. In fact, the movement into financial assets happening before that. Savings in financial assets was going up. So I think this is an important trend. The movement into the market is probably a little more recent, driven by returns. And of course, the worry there is return chasing is not always the appropriate thing to do.
What is that one big cue that you will caution global as well as Indian markets against? What will be that one cue which will signal this is the tipping point now?
Well, I think what is happening is money is tightening around the world. The Fed is on track to raise interest rates 3 or 4 times this year. And QE across the world is slowing down. So a lot of the money that was flowing into the markets via the central banks buying government paper and taking that out of the equation is going to dry up. Which means when that dries up, there has to be new sources of funding the liquidity that the markets need. And if that's not available, the question is, do the markets then at that point back up a little bit? Now, is there a signal event where this will happen? Maybe an inflation reading which suddenly turns out to be high, and there is a sense that central banks are behind the curve, a more rapid tightening. That may be the signal event. Maybe it is when one of the big two, the ECB or the Bank of Japan, signals a more rapid end to their QE. These are potential risks. It's hard to say that one will come true.
I will talk to you on inflation in just a bit, but I want to shift focus to the macroeconomic fundamentals. IMF says we'll be the fastest growing economy in the world. You had once said we are a one-eyed king in the land of the blind. Given that global growth is also likely to pick up by 3.9%, do you believe we can pat ourselves on the back and say we really are this shining spot, this oasis of hope, or is it too early to perhaps jump to that conclusion?
I think what we need to do is ask why we need growth. And we really need growth for the jobs that our young people need. And you have to ask, even with this level of growth, are we creating those jobs? And so if we are really to create those jobs, we need massive investment. And investment in job-creating activities like infrastructure, construction, all those areas. I would think the biggest concern in the Indian economy today is that those massive construction projects we talked about just a couple of years ago. I remember talking at international fora about Delhi-Mumbai Industrial Corridor and so on. We're not seeing those.
You haven't taken off.
What's happened? Why are they not? We need implementation of those kinds of projects because they have multiple effects. Jobs, they have spillover effects, they create sort of possibilities for industry. So that's one area where, new industries could come up with the better logistics, for example, from a Delhi-Mumbai industrial corridor.
But why do you believe it's not happening?
I think that there are bottlenecks. Land acquisition has been a difficulty. And unfortunately, people don't seem to want to touch the issue of land acquisition and try and make it go faster for fear of the political thing. I think that's a speculation on what the concern is, but somehow it's gone off the front page. Similarly, power. If we had 24/7 power throughout the country,
that would be a very different story.
It would be a very different story. And unfortunately, our attempt to remake the distribution companies, at this point still hasn't shown results. Uday is sort of much promised, but it's not clear that it's showing the results that we need to make the distribution companies buy power from people who are able to produce power, but are not getting prices for them. And therefore, we have excess capacity. We have power producers foundering because nobody is willing to take off their power. And we have distribution companies.
Is this lack of political will, lack of political gumption?
I think it's a need for political focus on implementation. And I worry that, one, we're not getting decisions taken by the bureaucracy. I think Mr. Jaitley has talked time and again about removing the impediments, for example, the fear that bureaucrats have of being accused of corruption.
That's right, yes.
But why aren't we doing that? So that's one set of issues, decision making by the bureaucracy. But we also have to ask whether things are getting too centralized. That we're trying to run the economy from a very small set of people, and whether there's enough sort of capacity there to manage what a 2.5 trillion economy needs.
Aiming to be 5 trillion by 2025. But you spoke about crude early on, and there is a very distinct, divisive debate on crude. There is a section that believes that rising crude will make sure that the tailwind turns into a headwind for India. Then there are others who believe that rising crude will ensure that the producers of crude globally do well, global growth will pick up, and that in turn will aid the Indian story as well. What is your take?
Well, I think
are you someone who fears that this is now turning into a headwind?
Because I think almost surely crude is a headwind for India. The global growth impact is minor relative to the direct effect of crude on India. That said, we are in a very good global environment, and so it is quite possible for us to weather the effects of crude. It will be negative, but we can weather it. And to that extent, I think we still I don't think that we should abandon all hope.
There was something that you started as the RBI governor, and people had a lot of hope that this will clean up the bank's balance sheets. You almost waged a war against NPAs. That battle has been delayed, but finally we are seeing IBC norms and talking about structural norms. People believe has reset the promoter-banker equation. You've said that promoters in India cannot treat equity as, debt as equity. Do you believe that equation has been reset?
Well, I think we have to see the outcomes of the bankruptcy code. I think the first few outcomes will be very important. Very important because once they set the pattern, I think you'll see if in fact there's a fair treatment of the banks in that process and they can recover some of their money, that some of the promoters actually who have been recalcitrant, suffer some penalties. There will be much more of an incentive to negotiate outside of bankruptcy.
And you believe a lot of that will happen?
Well, we have a lot of mechanisms outside. The SDR, for example, the S4A, all these mechanisms we set up. But without the bankruptcy code to focus minds, people sort of were a little lackadaisical about using them. If the bankers and the corporations can come together and negotiate in good faith, with the threat of bankruptcy behind, that, if we don't arrive at an agreement, we will have to go there. I think this will actually allow for a lot of sensible renegotiation. But we still need one more piece, which is that bankers have to feel confident that what they do will in fact not be second and third guessed.
But so you're essentially suggesting that you will give your judgment on it when there are a few cases of resolution. But one of the arguments in favor of these new IBC norms has been that, there has to be morality. People who've taken bankers for a ride can't come back and bid for the same projects. As somebody who believes in free markets, do you believe morality can be placed over markets?
I don't think it's morality. Actually, I'm in favor of, at some point, after you've done all the possible negotiation and you still haven't come to the table, at some point promoters should be kept out of the negotiation process because they've had their chance. They've had the ability to, pay back, to renegotiate in a way that's acceptable. If at that point they still don't have an agreement with the bankers, the worry is if they participate in that last auction. I've heard promoters talk, I've heard businessmen talk about being warned by promoters to stay away from the auction because that would give the promoters an ability to bid at very low prices.
That's right.
That creates a sense of corruption around this process, which I think this process would do well to stay away from. So if at the last stage you keep on promoters and their friends and cronies, I don't think it's a terrible thing. Yes, maybe in the best of all worlds we would get a more sound auction if they participated. But given the Indian environment, I think to begin with, to keep them out and to let that process take place in a free fashion, I think is better. Give them their chances before.
Right.
But once you get there, leave them out.
So basically, you're not somebody who's overly worried about the argument that comes from Indian industries on the other receiving side that say this is going to lead to significant asset value erosion or asset value depression. You don't think that's a concern?
I think that once they realize this can happen, they will lose their companies if they go to this process. They will be much more forthcoming in the final auction negotiation.
Right.
And at that point, they will be able to retain, but paying a reasonable amount.
I will ask you a quick question on banking. There have been some speculative reports that Indian banking should be, at least the private sector banking should be opened up to 100% FDI. Government babus and government officials have denied that report. But if government were to consider this, and this has been red flagged by some private bankers, what would your take be on this? Are we ready to import 100% FDI?
I think we are, but I think the bankers themselves might want to consider what that means. That if in fact they're seen as foreign banks, will the country be as favorable to them going forward? Being a private bank is one thing, being a private foreign bank is another. And many countries tend to be a little more concerned if the foreign banks account for more than a significant part of their financial sector. And I think that's a legitimate worry. So to some extent,
those concerns are justified.
That private banks themselves have to think about what happens if they're seen as crossing that threshold where nobody actually sees that Indians own them.
So while we are talking about structural reforms, I can't not talk about the GST. You've been a long-term proponent of the GST, perhaps a different GST than that was rolled out. But there have been changes made along the way, some tweaking here, some tweaking there. How long do you think it will take the Indian economy to do away with the pain induced on account of the GST?
I don't know, but...
or are we making too many changes?
Look, I think that... in the best of all worlds, we would figure out the pristine, pure GST, bring that in, and it would work from day one. We don't function like that. I don't think anybody can function like that. That some adjustment was needed. It's important we do this quickly and then we stabilize, and people have a sense that this is what it's going to be going forward. I think, there are a lot of people working overtime on this, and to some extent this was inevitable. I'm glad that we're doing it because the long-term benefits will be quite substantial.
Yeah. The last full year budget of this government is just a few days away. Given somebody who's been a part of budget making and then outside as the monetary authority, what is your expectation from budget 2018 given the macroeconomic realities that we face as a country?
Well, I don't know what, I don't want to talk about expectations. I want to talk about the hope that we will stick to what we have acquired, which is macro stability, that the budget will not blow the fiscal deficit to such an extent that people think that, India cannot be relied upon. One of the, I think, benefits we've had over the last few years is the India premium in, for example, foreign money coming in has gone off.
That's right.
People aren't demanding 6% extra to come into India because of exchange fears or fiscal fears and so on. That's a good thing. We've achieved that. We should retain that. That means that we have to focus, if you want to enhance growth, not in terms of fiscal stimulus, but in terms of more implementation of all these projects that have been announced, the yojanas that have been announced. We need to take a look at all the stuff and make sure that they're actually working. So I would like to see a budget focus much more on implementation and probably maintaining the fiscal course that the government has.
No, I get the point about fiscal prudence, but this government is also trying to press the puddle as far as divestment is concerned. And I think for the first time in many years, we will be overshooting the divestment target. Do you believe that's the way to go, or are we resorting to that because obviously there is an obvious dip on revenues on account of the GST?
Well, I think we have to do what it takes, whether it's through divestment and so on, to maintain the fiscal targets. But I would think more that at this point our focus should be on removing supply bottlenecks than on creating much more additional demand. We already have sort of signs of inflation coming up. We have concerns about the fiscal deficit reflected in bond yields, which are also moving out. So at this point, I would say that's not where we should put our focus. Whatever bottlenecks there are in terms of growth, let's fix those. Implementation.
Before I just move to inflation and a couple of questions there, there is a lot of talk also on the LTCG, the long-term capital gains tax and equities. There's a section that believes that it should be brought at par with debt. Do you believe that given the political mandate, they will be able to do that, and should they be doing this? It's been a long-standing debate.
I don't want to comment on specific tax things because I haven't thought about them too much. But I think there is a need for ensuring that we don't have sort of very significant loopholes in the tax system. And one of the concerns about the short-term, about the capital gains has been that this could be a source of loophole. But I don't want to offer a particular solution. I think we need to re-examine the entire tax system. Abrupt, frequent tax changes are also problematic.
That's right.
So whatever we do has to be flagged and done in a more systematic, sensible way so that we don't move back and forth.
Let's talk about inflation, and you flagged it off earlier. Thanks to crude that's rising and the other inflation reading, our inflation is on an uptick. We will perhaps end the year higher than RBI's own inflation target. What does that mean for monetary policy? Are we going to see tightening this year?
Look, I don't want to comment on the specifics of monetary policy. I think the Monetary Policy Committee gets a lot of advice and from many people. I would say that thus far it's heartening that they have taken their task seriously and are going about it, and are basically focused on what they need to do. So let them do their job.
No, but because you mentioned Fed, and because you believe that Fed is going to raise rates perhaps more frequently and perhaps higher than most had anticipated, what does that mean for monetary management for emerging economies like ours?
I do think that as markets tighten outside the world, we may have a little more pressure on money coming in. Now, at one level, it's not that bad because to some extent, that money coming in has to be managed, and we've seen our reserves go up substantially as we manage that.
Right.
So a little bit of pressure on in the other direction may not be a bad thing. But I do think we have to be vigilant, and this is why I say in this environment of rising oil prices, rising interest rates, macro stability is extremely important.
So just before I end this and before I let you not freeze here, a quick last question, and this is a massive debate back home on the implementation of Aadhaar. The Supreme Court is now hearing whether it should be mandatory or not. Nandan Nilikani calls it the Khan market critics who are trying to undermine the rollout. What's your view? Do you believe that there is a lobby that's working against him, or do you believe that the government needs to perhaps tread cautiously, given that there is a lot of concern around data security in India?
Well, I do think that we have to assure the public that their data are safe. And Aadhaar has to do a good job in, all these reports about easy availability of data are concerning. And so we have to ensure that security. We can't say trust us, it's all secure, and then have these reports coming out. So clearly more work needs to be done there. That said, I think we should also be open to sort of a careful and monitored use of Aadhaar to deal with some of our problems. For example, the US has a social security number, which allows all financial transactions to be tracked. Now, there are people who can do it, and it's not everybody who's allowed access to that kind of data, but somebody who's, for example, responsible for taxes has some insight into that process is not entirely a bad thing. So we have to balance privacy issues.
It can't be mandatory for just about everything under the sun.
It can't be mandatory. There has to be a structure by which we decide what it's allowed for, what it's not. And it should be such that, somebody can't go fishing and find the goods on you just because they have a grievance.
And we've seen breaches of that kind. But on that note, Dr. Raghuram Rajan, thanks very much for speaking to us.
Thank you very much.
Such a pleasure talking to you. That's Raghuram Rajan in conversation with us right here at Davos. It's back to you in the studios.